And so, yeah, I'm going to start out, just open the floor with Francis to kind of just give, initial thoughts, reactions, and then we'll just take it from there.
Awesome. Thanks very much, Wolf. Again, cool. So yeah, I think we just had kind of a high level format of kind of how we wanted to go through the discussion as well. So I think you've done the introduction already. We just kind of do a high level overview of the report. And then afterwards, maybe talk about all of the top line metrics. So what are the top line metrics? Revenue growth, the customer growth, the RPOs. What are some of the key drivers along that area? And then afterwards, we talk about some of the bottom line metrics, and then obviously we wrap it up with kind of what are we looking forward to the end of for the end of the year as well as Q&A. So I guess for me, on a very high level, yes, I thought the report was okay. I mean, it was good. It mostly was in line with lots of expectations. On a very high level, I think the customer growth was maybe some of the areas where I was pretty impressed. A few of the metrics along the line of how they improve some of their gross margins. Those was pretty impressive as well. So on a very high level, that was it for me. I thought it was okay. Not totally excellent, but it's always good with snowflakes. So
All right, I can chime in after that. I agree 100% with Francis, and I find it very interesting. Or we're clearly going to talk about a company that was very richly valued and got a lot of attention when it first came public. And when Francis says, it was kind of an okay quarter, there was triple digit pretty much everything. Everything they did was 100%, 200%. But that being the case, this is one of the more expensive stocks on the market, if not one of the most expensive stocks on the market. And that's the type of performance that I think people were expecting. So, it is a stock that I know a lot of people thought would come public somewhere like in the 125 to 150 range. It ended up coming public at about 245, went all the way up to 390 and circled all the way back down to, I believe it was around 190. So, now we're kind of settled in around 225. And I think from a high level for me, was a very, very richly valued stock. And this quarter, it did do what the expectations were this quarter to stay richly valued. Clearly, you're going to have to see how the market reacts to it. But if nothing else, Snowflake was an excellent business before this. And I believe they held serve, and they're still lining up as an excellent, excellent business, at least for the rest of the year.
and what about you, Frank? Yes.
Like for me, I think most of the things are really great because I'm a long-term investor. So I look out 3 to 5 years. I only, honestly, I don't care about the numbers as much. Just the things it's trending the way that I'm hoping for. That would be great. So later on, I'll share some of my findings. But everything I think is positive, and the Snow is actually the best in terms of number the SaaS companies out there. So I'm very happy for this quarter. If it's down, I will add more to it.
Perfect. Perfect. And I think, I mean, if you're not fully long the stock, I think some people would hope, yeah, it probably goes down tomorrow, adjust a little bit well to its valuation as well, so people get an opportunity to get more of the stock, I guess. So awesome. Okay, I'm really happy that Muji chimed in. I kind of bugged him in the email. I was like, hey, just chime in if you want to stop by. So we'll definitely reach out to him later. That's for
Yeah, sent him an invite to speak, but no pressure.
Awesome. Great. Okay. So let's start with top line. So I think we said we have a format on how we want to go through the conversation. That way it's kind of clean and orderly for everyone to understand. So let's talk about on the top line. So top line revenue growth as well as customer growth. What were some of the most impressive aspects in terms of the top line? So we'll start with you, Stock Novice, and then we'll go around.
Okay. Well, first of all, I do think it met a lot of the numbers that you wanted to see. It came in obviously at 10% year over year growth in product revenue, which is kind of their breakdown for the consumption. Also came in at 110% on their total revenue. Their RPO, which is a remaining performance obligation with how much they have remaining with their contracts on the books, once again was over 200%, came in at 206%. They reaffirmed something that they told us last quarter. They did come in at a net revenue retention rate again of 168% and said that should remain 160 for the rest of the year. So the numbers, I mean, the top line numbers are phenomenal. When you have that type of arrangement, and I know this is something I actually did a spaces with Muji separately, where he walked me through the tech before I actually bought into Snowflake. And when you have a company that's growing its RPO by 200%, it's basically tripling its RPO and then doubling its revenues, and the net retention rate is 160%, where customers are increasing their consumption by about 60% year over year. And then knowing that there's a little bit of a lag as they migrate, and they were very clear on the call today that it takes 6 to 9 months for their customers to come on. So really, the customers we're seeing coming on this quarter are customers that they added 2 to 3 quarters ago. So what they're doing is really just that combination of revenue growth, RPO, and NRR really bodes well. And I think normally where we see these hyper growth companies that will go from 100% revenue down to 90% revenue, down to 82, down to 75. What happens with this kind of RPO is exactly what Snowflake's doing. 116, 114, 116, 110. So that slowdown, and they're doing it at a run rate, approach over $800 million. So they're doing it at scale. So that combination is why this is such an expensive stock. And the top line numbers were pretty much in line with what they've done and what's come to be expected from Snowflake. And fortunately, as shareholders, or those who are shareholders and listening to management, they do expect, at least for the foreseeable future, similar performance. So that was, I thought the top line numbers were really good to see.
Impressive, totally. Yeah, and I do especially really agree, especially on the point of the retention rate, being able to grow at such triple digit rates as well as keeping those retention rates. And then knowing that you have a backlog, right? Because that's the most impressive thing about this company is the fact that they're getting 100% revenue growth. However, you have a lot of customers who haven't even started consuming the product. Like there's like this huge backlog of people who haven't even started to consume. So I guess it gives a huge amount of visibility into how much revenue could grow for the next couple of years as well. So pretty impressive. So maybe at this point, Muji, do you want to chime in, and then we'll kind of go around. Muji, maybe just chime in on top line. What were some of the key highlights that you got from the report?
Yeah, sure. Hey, everyone. I wasn't sure I could make it tonight, but I ended up being free. So yeah, I was able to listen to the call and look at the earnings slide deck. Yeah, certainly the top line was impressive with the product rev and RPO. I looked at the rising gross margins, I think are extremely exciting. Product gross margins came in at 72%. That's exciting to see for a company that has to pay an infrastructure tax. And they talked about that a little bit in the conference call about how they've been able to renegotiate their contracts with the underlying vendors has been a large part of that improvement, which is great to see for a usage-based company that has to pay for the underlying file and compute costs on the cloud vendors. And then the customer growth, that was also exciting. They've got a lot of customers rising to the $1 million mark, went up 116%. General customers grew 67%. So those are some of the top numbers that I liked the most. Customers keep flowing in. As they reiterated on the call, those customers aren't showing up yet. He said they're not even seeing all the Fortune 500 companies that they had a huge boost of last quarter still aren't even contributing to revenue yet. So there's a lot of revenue to come. And you see that partially in the RPO growing, over 200%, while revenue's growing over 100%. There's just a lot more to come with this company.
Yeah, it is quite pretty amazing. Frank, do you have anything to add on the top line, or did you
Yeah,
hit your points already?
sure. I agree with Muji, everyone, their points. To me, what's exciting is the RPO, because Snow is a consumption based, so um, so you can really determine how much customer is going to use for the quarter. So the revenue could be varied, right? Depends on the usage. But RPO growth really means like they're getting more billing, they're getting the contracts. So 200% means more customers are willing to pay. And of course, because it's consumption based, so customers don't have to use their usages. So the net retention is high. It should be higher than the other kind of SaaS companies. So, but 160 plus is really great. And the other thing I think they mentioned also, they are working on some kind of storage compression algorithm to that will widen the margins, uh, which is really good sign as well. I think once the Snowflake getting bigger and bigger, they will be able to really raise the margin. So, yeah, really good.
Perfect. I just thought maybe this might even be a good area for me to just share my own experience. As I think I mentioned last year, so my previous employer where I worked before, I worked on a data science team. We were building a large scale data science analytics for digital transformation for a financial institution over here in Canada. And we were in the process of implementing snowflakes. And I've shared this before, but it's a huge bureaucratic related experience because now snowflakes isn't only talking to your like your CTO or your chief technology officer, they're actually going all the way to the CEO level as well as the board level of the organization, right? So that was the decision because our contract, and I could disclose it because none of you know my company, but it was over 500,000 project, like how much we did pay for this whole project. It was almost a 3 year type of commitment, and I think this is what we're seeing in the RPOs is the fact that last year we signed this contract with Snowflakes. However, the data migration, so that's why on the earnings call, you guys probably heard this on the earnings call, they did mention the fact that it takes about 6 to 9 months before customers fully loaded. So I think out of the 104 customers, large customers they added on this quarter, most of those are probably not even consuming a lot of the product yet. And that's in our case, our company, that was the same case. We signed the contract last year. However, it's actually not even 9 months. I think the earnings call, they mentioned 6 to 9, but in our own case, it's going to take us over about a year and a half to actually do the migration because our company, we weren't originally on the cloud, so we're more of a legacy company. So we're still on-prem, we're kind of behind. But however, now we're going from on-prem all the way over to Snowflake's platform. And for you to do that, it's a burdensome. And so it's going to be over 1 year before we actually start seeing the fruits of snowflakes. And in this process right now, we're not paying much. We're paying them a little bit, but not paying as much. So snowflakes would get a lot of our company's revenues from, let's say, by 2022, for example, right? Meanwhile, at this early stages, professional services revenue, which makes up about 7% of the business, or 10% roughly, that's where you kind of maybe get them involved. So yeah, so I guess that's just kind of my experience. If you guys have questions, I'll be happy to answer that later. But maybe Stock Novice, Muji, Frank, want to ask talk about the guidance. So you could add to what I just said, but what you guys think of as well about the guidance, and if you have questions for me as well from that experience.
Maybe I can add a little bit on Francis your point here. So in the slides, Snowflake actually showed there's a forest consulting total economic impact kind of an analytical report. I think that's very interesting because usually in the enterprise space, you want to kind of getting the customers, you have to convincing them the ROI, just like Francis talking about how much you can save by using Snowflake. I think the numbers are really good. So in their slides, they are saying Snowflake ROI for the 3 years is about 612%. Um, and 50% reduction in time rolling out to the business products, 75% time saved by using Snowflake to load data, 75% reduction in effort of IT support. So totally, you could save $21 million over 3 years time spent. Just to give a contrast ROI, so Snowflake is 612%. And I did some Googling. For example, the CrowdStrike actually has a ROI of 316%. Twilio has a ROI of 277%. ServiceNow has a 235% ROI. And lastly, Salesforce has a 207% ROI. So compared to other great SaaS companies, Snowflake is really, really good in this regard. So that's why, Francis, you can see a lot of savings for using Snowflake in your company.
Perfect. Good, good. Yes, awesome. That was fantastic.
So about guidance, it's I think the CFO is known for being pretty conservative. Um, I thought the guidance was fine, and this quarter's guidance was I think 92 to 96% product revenue growth, and we saw 110%. Just to show an example of how they sandbag a bit on guidance. And so next quarter's guidance was 88 to 92%, which is the high end is kind of at the low end of what this quarter was, but I fully expect it to be above 100%. And then I'll note that they actually increased the full year guidance. Um, let's see if I have those numbers. Yeah, last quarter they thought entire guidance would be 81 to 84%, and they increased it to 84 to 87%. So there was an increase. Um, uh, Going back a little bit to what Frank was saying earlier, agree with your points on what you were talking about with the top line interest with RPO being of interest. Obviously a lot of customers are prepaying spend, and then revenue is kind of that variability of usage that customers might have from that prepay. Completely agree with all that and the NRR. But you made one point I didn't agree with. I just wanted to point out. You had mentioned their compression algorithm changed, and that you thought that would be impacting margins. That I don't think that's what they were
What,
saying.
sorry, what I was saying is that they mentioned they're going to improving the algorithm, so the margin will be higher.
So that wasn't about margin. They were actually pointing out that it was that they in that full year guidance they were actually removing several million dollars. I think they said 13 or 30. I don't remember the specific number, but they were actually subtracting from their guidance the fact that the compression algorithm will impact revenue, if only because they pass through that savings to the consumer for storage costs. So they mentioned, basically, they mentioned it in the past. Last year, they made a lot of performance improvements and got queries down. Some queries saw a 50% improvement last year, which means less compute flowing through to them. And this is just another one of those improvements that they make on a regular basis. I think they mentioned every 2 years they kind of revisit the compression algorithm they use on the files that they save to S3. And so I think the discussion was more around they're removing a little bit of revenue from their storage side, and they really don't have much revenue on that side. It's all about the compute. But when he was referring to margins, I think that's kind of where he was saying the greater impact on margins is that they have renegotiated their contracts with the underlying cloud vendors, and that's where we're seeing margin improvement. So I guess I'd just like to caution a little bit that I don't think storage improvements means higher margins. I think what they were saying is that renegotiated contracts for how much they pay for S3 and how much they pay for the underlying compute is where they see the margin improvement. And they were actually predicting that margins are going to remain at 72% for the remainder of the year. They may tick upwards to high 70s. He did not think they would ever get to 80%. And it's just because they're a consumption-based company and they have that, what I like to call infrastructure tax that they have to pay, and all the compute and storage. But I'm actually very encouraged by, they just basically adopted this new encryption algorithm, or not encryption, compression algorithm, are storing more in less physical space in S3. And that has to mean better performance as well. And I love that they pass that through to the customer. So ultimately the customer's paying less for storage because they found this better compression technique. That just continues to reinforce their high performance for low cost storing, just to sell their kind of base level of their product, much less all the other cool things they do like data sharing and marketplace.
Right. And if I could chime in here, I heard kind of a mix of both of those things, actually. Every 2 years they do. And obviously we're talking about the guide. And they did not raise their full year guide that much, all things considered. They raised the top from 84 to 87, which is smaller than what some other companies have done. But they did mention that $13 million cost for the new compression algorithm. And if you just put that $13 million in there, now that guide goes up to 90% for the year. And the CFO was very clear that even in his first time passing through it, he did not realize that there would be that much of an impact for the 13 million. But they did pass it through to their customers. And I think one thing that's fair, like we're throwing out SAS, SaaS a little bit. In their investor presentation, it's been both of the last two, they make it very clear that they're actually not a SaaS revenue model. They are consumption based. It's not subscription based. They clearly say they're not a strict SaaS model. But what I heard I heard the same as Muji, where the CFO talked about 72% gross margins for the rest of the year, with a path to get to 75. And the way I understood it was, in doing they're only limited, and I think Slootman said this to some extent, customers are only limited by their creativity and their budget. And what this allows Snowflake to do is, by having a better compression and then passing that through to their customers, and customers spending less on storage, the way I understood it from the way it was explained on the call, the consumption revenues are actually a little bit higher margin than the storage revenues as far as Snowflake is concerned. So if they can keep the same budget from each of their customers and have a smaller portion of it go to storage and let them free up more and maybe use a little more consumption to get to the top end of their budget, those consumption dollars are higher margin for Snowflake. So I kind of viewed the compression that they do, and the comment was every 2 years they do it. I viewed that as giving some operational efficiency to Snowflake, to just give a little bit of a nudge to the consumption portion of their consumer spending, because more consumption dollars are that's their path to get from 72 to that mid to high 70s that they mentioned. And if you guys have a different opinion on how that was kind of explained, I'm happy to hear it. That was kind of what I took from the call, and by passing that on, that was the effect that was going to have in margins in the long run. Not this year, because this year is still 72, but passing that through was what allowed them to possibly have a path to 75, because it would kind of goose the higher margin consumption dollars coming in.
that makes a lot
Yeah,
that makes a
yeah,
lot of
that's what
sense.
I.
I like that explanation. So
Yeah,
that's it's yeah. So I agree. I think we're all correct
yeah.
when you say it like that.
Thank you, Joe. Yeah, that's what I heard as well. Maybe I did not explain myself clearly. Also, maybe you guys can talk a little bit about the new chip technology they're talking about that will bring the performance games as well. So maybe you can talk about the impact for the future.
Yeah, that was pretty interesting. And so, all of their infrastructure, they're cloud native. And so, they're not the ones running those chips. It's going to be new chipsets from Amazon, in EC2 that are available. And they mentioned that they are looking at ARM-based chips. And so, yes, that would improve the compute potential on their uh, underlying compute. And so, yeah, it was pretty interesting, kind of a little one-off comment that was basically a, dot, 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 stay tuned for more. And so we may see more of that in their investor conference and or customer conference. But I have the feeling that news is coming later this summer.
Correct. And I believe, I think they really did mention, like, hey, they told analysts and everyone, hey, make sure you come for our conference, what their Investor Day conference, which is coming up in June. They actually said they do have a couple of surprises for investors. So it'd be really interesting. So I expect a lot more clarity from them. They didn't, as you guys mentioned, it was a brief sentence on this call. I expect over at that conference for them to give a little more clarification around how they see performance. Well, similarly, I agree with you guys as well. Muji, did you want to add something there real quick?
I do actually. I just looked up my note on that new chip technology, and so it's sometime over the next year we're going to see that. And they again reiterated that that passes through to the customers. So this is like their performance improvements last year in their query engine. This isn't. This doesn't help them as far as their revenue goes because compute is everything for them, and so the more compute the merrier. But I love this focus of theirs to make the compute as performant as possible. And this is just another move in that direction. And they explicitly said this is going to pass through to customers.
And I
So,
mean, maybe you guys correct me here, but I think the way I look at this is really scale economics, right? So you improve performance and compute capabilities on the platform. It probably takes they get a little bit of short-term negativity from revenue. They don't get as much revenue, obviously. However, if clients and customers like my company, when we're doing ours, like if we're getting faster queries on their faster queries and cheaper, faster queries for what we're actually performing on our platforms, if we're maybe building dashboards or ad hoc reports for executives and whatnot, if we're getting performance, if me as a customer know I have to pay less, then maybe it incentivizes me to do a lot more performance on the platform, right? And so it's almost like the scaled economics whereby, yes, you're not getting as much revenue. However, if more customers perform more and more analysis and computations on the platform, then you get to such a large base that eventually that adds a little bit of extra cents or dollar to that top line revenue. And I think maybe this is the long-term strategy that they have in mind. So yeah, quite impressive. So thanks for clarity around that. So the next piece I wanted to talk about here was on the bottom line. So on the bottom line, what were some of the key observations that you guys noticed from the call? So I think there were three things that maybe stood out was there's going to be a lot more hiring over the next year. So I think that's something we should expect. We've talked about the gross margins aspect as well as cash flow, a little bit of better improvements in their adjusted cash flow as well. So just want to hear you guys is on the bottom line. Was there anything that stood out for you guys? And any key points you want to discuss there? So we'll start with you, Joe.
Yeah, I'll chime in on that. I thought their bottom line was excellent. Second quarter in a row, their operating cash flow was positive. The adjusted free cash flow was positive. They're had a 10% margin there, and really just from a non-GAAP standpoint, they're really starting to leverage their scale. And when you just look at their operating margin, I mean, the last 5 quarters, it was minus 67%, minus 44%, minus 30%, minus 24, minus 16. So they are not only they're not creeping toward break even or profitability. I mean, they are charging toward it, and they're doing it at a run rate. I think next quarter, they have a chance to have challenge 100% again with their guide. So now you're going to have them at a $1 billion run rate. And what you want to see when you have a company scaling this fast, obviously you want to see leverage. And if that leverage is happening, from an execution standpoint, particularly as we talked about with gross margins, the gross margins are going up every quarter, and the operating and the profit margins are, or at least the losses, they're narrowing super fast. And that's what you want to see. And again, Snowflake's already priced to do all this. So the fact that they're continuing to do all this is what we need to see, frankly, if you're gonna hold this stock waiting for them to try and grow into the valuation. They're doing all the things they need to do, and I personally think they did it on the bottom line as well, both from a cash flow standpoint and also from an operating profit and operating margin standpoint. They are following through on what they're saying they're going to do, which is really, as a shareholder, that's what you want to see from a management team, in my opinion.
Totally agree on that. Great point. Anything to add there, Frank?
Yeah, I'm totally agree with Joe on that. I think one thing I really love to see here is that their S&M, sales and marketing expense, are trending down. Last quarter, I was a little nervous. Their expense for S&M are higher than their revenue. So now they're trending down. Let me see the numbers. It's much better, and also the R&D spend are actually keeping it up. So I like to see that as well, because that's where they can help them build out a moat. And for the S&M, because they're already growing so fast, if they cannot keep up the speed and spend more, that's a really dangerous signal, right? So I love seeing those two numbers.
Yeah, totally. Muji, anything to add on the bottom line report?
Also agree with Joe. Great analysis there. The operating margins obviously swinging, 50 plus percentage points year over year. So that margin, that trend that Joe was mentioning is exactly what I like to see. They are stampeding towards profitability. I point out that it looks like OpEx is growing just as fast as the company um, in GAAP numbers, but when you look at it, it is entirely in stock-based compensation. So all this massive number of new employees that they've been onboarding last year and now this year, obviously the appeal there is for stock-based compensation. And so that went up, 22 million to 143 million. And so if you adjust that out, OpEx only grew 37% outside of stock-based compensation. So
Right.
just
And
shows
that's
that
actually,
besides, go ahead, Joe.
I hate to hit you, but just to kind of back up Muji's point, I actually track that the non-GAAP op expenses as a percentage of revenues, and much like I track the operating margin. And in that particular case, to Muji's point, and you can talk about whether or not you take out stock-based compensation. I know some people, there's varied opinions on that, but if you take the stock-based compensation out, their operating expenses as a percentage of revenues went from 129 to 10 percentage, 129%, 107, 97, 90, and then this quarter 84, which was a record low. Granted, there is stock-based compensation going out, but from a non-GAAP standpoint, to Muji's point, they are becoming more efficient with the way they're handling their operating expenses through a non-GAAP lens. That is trending in the right direction as well.
Yeah, I generally OpEx, I just normally track GAAP numbers there for ease. Top line OpEx, total expenses. I don't even break into the three categories normally. I usually look a little deeper when I see OpEx growing faster than top line. That's when it gets concerning. And OpEx was growing 107%, revenue is growing 110%. It warranted a little deeper look, and clearly it's all in stock-based compensation, so that's fully acceptable to me as well.
Yeah, I just want to add a little bit the stock-based compensation. As an employee, as an engineer, I love to see that, right? Because that's how you attract talents and getting great people there. I actually have two colleagues went there, Snowflake, so good for them. Also CEO gets a big incentive as well. So that's how he can, lead a company really well. I think one of the numbers I want to mention here is I look at the LinkedIn their sales growth, sales like people growth 34% from last year, and their engineering growing 96%, and their IT people growing 88% from last year, and then business development people grow 29%. So sales and business development grow much slower than engineering and IT. I really like to see that, and also it shows up on the slides as well. But I usually using LinkedIn as a more kind of earlier indicator about that. And now a few critical hires I also saw on LinkedIn. I think it's very reflective here as well. For example, they hire a global head of data and analytics strategy officer and he was from where um, McKinsey partner. Oh, I forgot to put it here, but he hired this person as a global data analytics, and then there's a VP partner sales hired. I think they expanded really well for the ecosystem. I think this person Brian Hardwell played a good role, and then they hire Asian Pacific Japan GM, which is from VMware and EMC, John Robson, and then they hire a chief communication officer, corporate marketing. That's also really good for putting up a Snowflake good image to the world and also getting alliances. So maybe I did not catch a lot of on the partnership. One of the thing I noticed is one of other my favorite company, Zoom Info, which I also invest, also partner with Snowflake now. So customer can grab Zoom Info's data, like people data, contact data, and mash up with their data in Snowflake. I think that's gonna really help Snowflake as well, because now you have more things you can analyze, because Zoom Info got most of the people contact information. So I don't know about the other partnership. Maybe somebody else can talk about it. But I saw a big graph of new customer partners, really good.
I'd love more details on those LinkedIn hires. If you've tweeted out
Sure,
any details
sure.
yet,
I'll
I'd
send
love
you.
more.
Yes.
Because that's great stuff to learn about, and that the value of platforms like LinkedIn is that you can really see those job trends like that.
Yeah, really good.
Perfect. And I think I agree with all of your points already. You guys nailed it already. And I think what's fascinating is in Q1 or this past quarter, they added 400 new employees. And so they're also increasing hiring and sales and marketing, as well as still improving those bottom line margins. And I think that's quite impressive because, I mean, if they weren't even expanding on their hiring, and so you could even see this company become, you could see a lot of that operating leverage moving a lot higher. So I find that quite fascinating. And on the call, there was a lot of discussion about EMA and APAC, right? Asia. And they did talk a lot about how those areas are actually seeing growth. So that was a couple of there was a quite conversations around those points and how the company, and those are a lot of untapped potential for the company, right? Because there's so much growth in those areas. So I think with what Frank just mentioned already, I think we're already seeing it in the job hirings and how those are further areas for growth as well. That's fascinating. Okay, so my last question before and then kind of go and wrap it up is on the customer side of things, was there any maybe highlight that you guys talked about? I know on the call, did you talk about some of the new verticals that they're going into? They talked about how media, telecommunications, and ads and digital ads are actually one of the largest segment on Snowflake's platform. Actually, I found that quite interesting. That not even the financials like BlackRock or healthcare. I found so that was pretty interesting. That media, and as well as they added a significant amount of large customers in this quarter. So the net add on this quarter was about 20 something. And if I look through my record of snowflakes, this is one of the highest net add they've had, especially on the higher level. So so that also I found that pretty interesting. So is there any comments from you guys just on the customer ad of things, or maybe even on the marketplace side of things? Any comments around that, something that maybe surprised you guys on that perspective?
I'll chime in on that first, and I know when we did a little back and forth before this, you also talked about what to expect for the rest of 2021, and to me, the customers play into that. And being honest, I was disappointed with some of the customer numbers. And I know that the $1 million customers, that number was their biggest number ever, and it grew 117%. Those are also customers that, listening to them, they brought on board 2 or 3 quarters ago. And when I think about their guide, I personally was very happy with their Q2 guide. Kind of lines up with what we've seen to this point. I was a little disappointed, and I know it was, they had the compression cost, but it was just $13 million, which is not a huge number when you're talking about, a guide that's over $1 billion. And they did not really move the full year revenue guide that much, and they didn't move the free cash flow guide at all. And when I think about the customers, they're usually a little bit smaller in Q1, so there's a little bit of seasonality there, and their raw number was down from Q4, but this was the first quarter from a total customer standpoint that their sequential add was less than 10%. It's the first time in their history that they had less than a 10% sequential add, and Q1 being a little seasonal anyway. I know there's a law of large numbers, but you can't deny that this was the first time they dropped below that. And then as far as their Fortune 500 clients, in the entire quarter, the entire 3 months, they only added one Fortune 500 client in the whole quarter. The count went from 186 to 187. And there was an analyst that asked about that specifically on the call, and the CFO's answer was, something to the effect of, there's some lumpiness there and a longer sales cycle. They're not that worried about it. They usually pick up during the course of the year, and then made a comment about how a lot of the salesmen want to try and close deals in Q4 because it's kind of the end of their commission year. But for a company that's growing, last year they added 17 Fortune 500 customers in Q1 as a smaller company. This year, when everything should be coming to the forefront for them, they only added one. And when I think about the smallest total customer ad and the smallest Fortune 500 customer ad, and knowing that the $1 million customer ads were customers that they added 2 quarters ago, that makes me wonder, along with kind of the lower, guide for the year, whether they're looking at it and going, "Hey, we didn't add that many customers this quarter, and so now 2 to 3 quarters from now, when those revenues start kicking in, it might not quite be as high as what we expected or what we've seen in some of the past quarters." So, being honest, that was a kind of a problem I had with the guide, and is a reason that I will not be adding to my position. It's a little under 5% of our portfolio now, and it's probably going to stay there. I'm going to be really, really focused on customer ads next quarter, because if those numbers don't pick up, knowing that we have a 2 to 3 quarter lag for a stock that's this expensive, it might make me revisit the thesis, to be honest with you. So I was disappointed with the customer ad.
Yeah, and I think, yeah, you do bring on the lower end of the market. Yes, that's for sure. Because when I look at my numbers, actually, so I could quote here is this is from 2020 Q1. They added about 128%. Q2 was 100 and about 100%, 84% the next quarter, 73, and then this quarter 67. So yeah, on the general customer add of things, yes, there is a sequential add. And then on the very higher end, a little bit of add kind of on that point as well. But yes, that would be definitely an important metric towards going forward. And then one question I wanted to ask, do you guys think they're facing a little bit of tough comps? Because that's another thing we maybe haven't factored. Are they facing a little bit of kind of tough comps from last year as well? So kind of chime in on that.
Yeah, before we move on from customer ads, do agree with Joe on part of his worry and don't agree on another part. Absolutely, the customer sequential ad dipped under 10%. It was 15%, 14%, 16.5%, 10% sequential customer gains over the last 4 quarters. And so there was a dip there. I did notice that trend change and kind of changed. I like to track positive trends with a certain color in my spreadsheet and had to turn that number off on the customer ad. So the total customers did slow down, and I do want to watch that. As far as the Fortune 500 customers, I'm not anywhere near as worried about that number. Just given the long sales cycle, and they reiterated that on the call, it takes a long time to handhold these customers and get them to commit to what could be, many months and years of an implementation to switch to their product. And that's what Frank has talked about pretty extensively the last two earnings calls about how he is going to kind of personally try to help deliver a message to the C-suite and board of directors. So he's kind of changing or slightly shifting the go-to-market. So the go-to-market, heretofore has been bottoms up, developers and mostly like IT staff, data analysts, the people who are building data warehousing. He's going in with a new message about, you need to be in this data cloud. And that's what's being delivered to, the top of companies now. And so there is a little go-to-market shifting going on. But also, they pointed out they had a huge number of ads of Fortune 500 companies last year, or I'm sorry, last quarter. So, it went from 8.4% to 11.4% sequential gain. So they had a huge number of net ads last quarter versus one this quarter. It's probably just timing. It's how long does this customer need to be sold to? And some of them might have, hurried that process up or may have delayed it. And they've been working with this customer for months and months. And so I'm just not so worried that it dropped to one this month or this quarter versus 20
Yeah,
plus ads
I
last quarter. Go ahead.
yeah, I totally agree with Muji. When I yeah, when I look at the customers, I usually don't look at a quarter by quarter. Probably better representative would be yearly, because when my company when we were a startup, uh, to get a Fortune 500 customer usually take more than 2 years. Some are 2 to 3 years. So, but with Snowflake, like the developer bottom up driven, I think they would be able to penetrate maybe some portion of it, but they still need a, maybe sales, like direct selling into the big customers. I think that's one of the first person I mentioned, like Keaton. He's the new hire for chief customer officer, uh, coming from Accenture and also McKinsey. So I think he will be able to talk to the customer, really upsell to those bigger customers. I think he just joined like a month, so I think those are key indicators. Maybe Snowflake will try to hire more people, get into that space. Also, ecosystem would help, because when bigger customer look at it, they look at the whole suite, right? Because they need to make a decision whether Snowflake is good enough to invest on. So they need to look at all the aspects of the ecosystem. So I think with bigger ecosystem Snowflake has, and with a bigger, stronger sales team, yeah, they will be able to penetrate, but maybe not looking at a quarter by quarter. Otherwise, you would sell the stock, right? So we should be a little bit more careful on that. Just
Yeah,
my opinion.
yeah, I agree with that. And just to be clear, I'm not it's a hold for me. And I understand the quarter for quarter, but the trends really matter with this company, as richly valued as it is. And when I see customer ads that are 17, 10, 13, 19, and 1, I'm making that a yellow. I'm making that a yellow box on my spreadsheet, and I am going to watch that number next quarter. And knowing that there is that 2 to 3 quarter lag on customers coming on board, I'm giving them a pass for the low quarter 1 because there is some seasonality. I would say that they're going to have a little bit shorter leash on quarter 2. I'd like to see those numbers pick back up, or else there's a real chance that we run into some problems 2 or 3 quarters down the road where when you talk about how quickly they slow down at scale, if they don't have new customers coming in and all they're doing is relying on the NRR, that's going to make a different relationship in some of those numbers than what we've been used to. Once you start doing that, then that law of large numbers will kick in really fast. And if that happens, it's definitely not going to be able to carry the valuation that it's carrying right now. So more of an item to note. I thought it was a really good quarter. That's a quarter. That's a part of this report that kind of stood out for me as something to make sure. It's probably going to be one of the first things that I'm checking on next quarter's release is what those customer numbers are.
Yeah, certainly. So land and expand is the name of the game, obviously, Joe. You got to have both of those parts of the equation. You got to have the lands, you got to have the expands. NRR is part of that. You can see that 168%. Last year's customers are spending 68% more the following year, which is fantastic. And they projected that out for the rest of the year. That's the vision that they have into the operations. But I find it interesting with this company how slow it is for new customers to ramp up. Is a slight change, I guess, to what we look for in a regular SaaS company as far as land and expand. And so we haven't even seen the revenue for customers that have been onboarding this quarter and likely last quarter. Like they mentioned all of the Fortune 500 customers that they added last year, which was nearly 20. The last quarter, they added nearly 20 versus the 1 this quarter. They have not seen any revenue from them yet, a quarter later. That's how long it takes for new customers to ramp up. So absolutely keep your eye on the lands, but just with the caveat that they take a while to ramp up and even show up as revenue and possibly even RPO, depending on how much they've committed to.
Yeah.
So there's a slightly different dynamic here than say Datadog or CrowdStrike or Okta, where you've got a land means upfront costs immediately. It's a per user charge with CrowdStrike and Okta, let's say, and so a new land means immediate revenue contribution, and that's not the case here. So it's worth letting play out.
Totally agree on those points. And I think I mentioned this a little bit earlier on, right? Just like, yeah, in our organization, it was like you had to set up a whole project management team. We had to hire new data engineers. We had to hire new BI analysts. You needed someone on the data governance side of things, right? So it was massive. And even before you approve like a 500,000 project for Snowflakes, you need to go through so many silos in an organization. So yeah, it is a really long process, and obviously before they do expand or land, even revenue shows up on the bottom line, then it takes a longer time. So perfect. So I just wanted to maybe open up the for questions now. Maybe just 1 or 2 questions now. For in case of people who might have questions or anything to add to the conversation, or maybe something we missed. So I'll turn it up to Wolf.
Sure. Yeah, we have a couple in the queue, so I'll bring them up and see what they have to ask. All right. Brought up K-Dog. K-Dog, do you have a question?
I'm sorry. I had a question a few minutes ago. I'll back myself up.
No worries. Okay. All right. I have another one in the queue. Retirement not secured. Do you have a question? We'll see. And if anybody else has a question, feel free to.
Maybe I have a question here.
Yeah, there you go.
So because we are talking about this new Snowflake, very hot IPO company, we should talk a little bit on how we should think about investing in this company. For example, for me and Joe are quite different. Joe is running a very concentrated portfolio, less than 10 stocks, I guess. I'm running a very big, large portfolio, over 100 stocks there. So obviously, we will looking at things a little bit different here. Um, so maybe we should talk about how we are thinking about Snowflake. There may be runway, like 3 years, 5 years outlook, how people should think about how to invest in this company.
Sure, and maybe I could even just use the opportunity, Tony, because I had this final question. I was keeping it for the end, but I guess you just ask that right away now. Is yeah, as Frank said, what are you guys looking forward to for the rest of the year? That could be Q2 or for the rest of 2020. I guess what keeps you guys kind of excited, as well as what Frank said. How are you investing? I think on my own side, it would just be the data marketplace. That I guess that's kind of what I'm looking to hear more about. There was a little bit of conversation about a couple of customers adopting edges, and so edges are, and I still need to kind of learn a little bit more about that. But I think edges are some of those core elements to the data marketplace that they're building, and has some of those key enablements for some of those aspects of the marketplace itself. So it was kind of interesting to see there was total listings of about 30% quarter-over-quarter growth in the data marketplace listings. So it would just be interesting to see how that goes throughout the rest of the year. The data network effects that the company could actually get from that over the rest of the year. So that would be, but that still looks like a very nascent early area of Snowflake's story. So I wouldn't expect too much, but it would be great to hear what we see on that for the rest of the year. And I think execution. And for me, I don't have a position right now, but likely might hold it. So I'll leave the rest to maybe Joe. Yeah, kind of yeah for me. How are you approaching this from an investing process, and as well as maybe what are you most excited for and watching for the rest of the year?
Well, first of all, I'm happy with the quarter, and as Frank mentioned, I do run a very concentrated portfolio, and I say, that it's just under 5% of our portfolio. It's actually my second smallest position. So we have 10 holdings right now, and Snowflake is number 9. I liked what they did this quarter. They did enough to stay in our portfolio. I run mine a little different. People that might follow along, that follow me, or maybe read my Substack. It's about a 10 stock portfolio, and it's my best 10 ideas, and it's my best 10 businesses. And the 10 companies that I think are in the sweet spot of becoming dominant companies, those are the ones I want to own. And right now, Snowflake's business is phenomenal. I wasn't crazy about the customer ads. I would have liked to seen a little more on the land part of it, to make sure that that carried through the year, just because they have such overwhelming numbers they have to meet to maintain their premium. I thought Zscaler had a great quarter. I thought Zoom Info had a great quarter. Right now, Snowflake stays in my portfolio. I'm expecting another 100% growth revenue quarter next quarter in quarter 2. I'm expecting maybe a firmer raise on the full year guide. I'm expecting RPO that's probably north of 175% next quarter. I think those are the things that Snowflake's going to have to do to maintain its present story in the market. The way I run my portfolio is like Snowflake or Lightspeed, companies that are at the back. They're constantly battling with Zscaler or Zoom Info, which are companies that are at the top of my watch list, and that makes it kind of a quarter by quarter battle royal. Really liked what Snowflake did this quarter. Fully expect them to have another strong quarter next quarter. I am going to want to see a little firmer numbers on the customer side, I think, going forward. But if I narrow it down to wanting to own the best 10 businesses that I have, Snowflake has cleared that bar and is definitely one of those companies. So very happy with owning it. Very happy with what they did this quarter and looking forward to the next one.
And Muji, what about you?
Well, like Joe, I run an extremely concentrated portfolio on hypergrowth, which is why we're friends. Nice to see you, Joe. Um, but unlike Joe, I have Snowflake in my top 5 positions at the moment. After further researching them, wrote a piece on my Premier side of my blog a couple weeks ago on them. And there's a lot of interesting things coming down the pipeline over the next year that I have my eye on, and some competition that I have my eye on. Like Joe mentioned, I have a high bar to stay in my portfolio as well, and so they need to continue to execute. But I think they're executing fantastically right now, and I see things in their technology that I find unique, and I find them able to scale in multiple directions right now. And so I find them pretty enticing technologically in terms of where their position is in the industry. And now it's just a matter of executing against it and proving the valuation. And certainly their valuation will contract at some point, but when they're growing 100% revenue year over year, then that really allows you a lot of leeway into how much margins contract and still have a very successful um, position in this company. So pretty excited about them right now, but they're not one of my tip top holdings. Probably mostly around valuation. It's not that I factor that in heavily, but it certainly is a slight factor. But slightly to circle back to the things I'm looking at over the next year, I'm looking at Snowpark, which is a product they announced in November that is going to, my expectation is eventually allow Spark to be running inline in their compute, which kind of opens the door in their marketplace and data services categories. We kind of mentioned it earlier, but I'm pretty intrigued by, certainly they mentioned a lot of times, I think Francis, as you mentioned, to the analysts on the call, hey, go to our investor day, their first ever, right at the beginning of their customer summit. And so the beginning of June, I think, is going to have a lot of my attention, just to pay attention to what they're saying. I think they're going to dive deeper maybe into margins and expectations for the next year. But their customer summit is going to be pretty interesting to hear what customers are doing with it, and new product enhancements, specifically around Snowpark. And I'm pretty intrigued by that ARM chip capability they were talking about, where they're trying to have a much more high performance compute capabilities in their platform. Again, that goes to the performance cost benefit, just in the simple comparison against all the main competition out there. But I think they have a lot of compelling advantages over the competition. So I think they're going to continue to execute from here for a long time.
Perfect. Awesome. Okay, Wolf, I think, Frank, you kind of mentioned you're looking at this maybe from the next couple of years, right? And not much has changed for you. Yeah.
Yeah. So for me, because I'm running a large portfolio, over 100 stocks, Snowflake is the first one I add 1% to my portfolio. So right now it's at the EV over next 12 months revenue about 58 times. Comparison, Okta, Zscaler is about 30, Cloudflare, CrowdStrike is about 35. So it's much more premier. I fully expect that if they don't perform well, it might be dropped to the same level as CrowdStrike, Cloudflare. So that would be right now it's like $230 stock. So maybe half, less than half, so 150. I fully expect that in my portfolio, but I'm not going to drop it in any cases. And because I'm expecting like consensus, expecting it to grow like 80, 85% the next 12 months, I'm fully expect it has a really durable growth endurance for the continue 3 to 5 years, because now all the major enterprises are transferred into like cloud, right? So store in AWS or warehouse data lake are no brainer. So it's a huge market here. Um, I I'm very bullish on Snowflake, so I'm going to endure 50% drop again, if there is any. But if they continue to grow like 85%, so next year even they are stock price the same, they will be about 30, which is on par with other SaaS company. I think because the bottom line, the top line is better, so I'm fully expecting it's going to be a little bit better than the other ones. So that's what my expectation is. And in the next 2 3 years, I think it's going to be uh, maybe it does not beat the market, but you will not have a loss. But I would expect it to go really well. It's going to be, I would imagine, a 300, $500 billion company in 5 years. That's kind of my thesis of investing in this company. So just gonna hold, keep watching them grow, like keep keep listening to Muji and Joe on the financials. Francis, do you?
Yeah,
Yeah.
looks like Francis might have glitched out from the space for a second. But I do have a question from the audience, and hopefully that'll give him a minute to come back in. So we'll just wait on that, and I'll just ask my question, I guess, to the speakers that are here. We'll start with you, Muji, and that was the question came from some of the audience, and they asked, will, I guess it's ZI, I'm not even 100% familiar, I guess Zoom Info or Snow benefit more from their partnership? I guess which side has the bigger benefit?
I'll defer that to Joe. I don't, I'm not as up on ZI as he is.
Yeah, I actually didn't take that as a partnership. I thought it was just a mention that ZoomInfo was a customer of theirs, one of the companies that they landed. And for those that aren't familiar with ZoomInfo, it happens to be on my watch list. So lucky the name came up, I guess. But what ZoomInfo does is they are kind of a data aggregating company that puts together contact lists. So it's a sales management software. It helps you to know who the right contact is to call. It can tell you buy signals when a company when a company might be making a purchase. And if you're a salesperson, it kind of cuts through the layers and maybe gets you to the person that can make a call for you. If there's a new hire, it automatically updates. So really, what it is, it's a really fancy Rolodex. But from what I understand, for people that do that for a living, it's a valuable tool, and it's a really interesting platform company that is growing north of 50%. What I took from that was that they were using Snowflake, and that allowed ZoomInfo and ZoomInfo's customers to share their data more cleanly. So if I'm a customer with ZoomInfo, I can take my existing contact list and contact information and their contact list and contact information and merge them. So I thought it was more of a consumer relationship than a partnership. So, but my guess, knowing that, is I would guess ZoomInfo is the one that benefits maybe a little more from that, simply because it just makes their platform work better because of the ease of the data sharing that Snowflake allows.
I
Perfect.
just looked
Appreciate
it
it.
up. I just looked up the PR. Yes, there was a mention of ZoomInfo in the conference call, and it was around them being in the data marketplace, and I just confirmed it with the PR that came out earlier this week that it's solely about ZoomInfo being in the data marketplace. So this is absolutely more about ZoomInfo than it is about Snowflake. So they're one of the providers like S&P 500 that is selling their data on the Snowflake data marketplace.
Awesome. Also, Francis is back, and I also just brought up Chris Seifel. Chris, you have a question?
No, I just when everyone was bringing up Zoom Info just now, I've actually been diving pretty deep into the company, and I think Joe maybe undersold Zoom Info's positioning in the market. So they're really the only reputable and trustworthy provider of actual employee level contact data. So there are kind of three different players in this market. There's Dun and Bradstreet, which has the company profiles. There's ZoomInfo, which has all the employee level data, and then you have LinkedIn, which is more of a social graph. So ZoomInfo has really a dominant share in this vertical, if you will. And so on the data side, where that comes into play is they are aggregating the contact info of all of these professionals, hundreds of thousands of professionals across, I think, like three or four different data sources. But that entire database, so it's a database, right? That's updated frequently. Every time there's a change, they're updating the database. And so their users or their customers are then buying new like tokens, if you will, to get those updates and refreshes. And so I think having Snowflake as kind of the data warehouse, the data, platform for them is, yeah, it's much more, I think, beneficial for Zoom Info than really a big story for Snowflake.
Awesome. Awesome.
Yeah,
Oh,
yeah, I totally agree. Usually, it benefits the company that integrate into the platform company, but it's still adding incremental things to the Snowflake because they want more and more partnership. So their ecosystem is more complete, right? So then customer are easy to make choices. And Zoom Info is a turbocharged LinkedIn, if you will, and uh, and perform really well at getting to around $30. Now it's like 42. So pretty good company.
totally. Awesome. Yeah, and I did used to own Zoom Info in the past before, and I do agree about the breadth of the amount of data that they do have. Awesome. So I think that kind of
One
maybe
last question, if that's okay, Francis, just of
sure.
my personal curiosity, and that's just my speakers. Some people use this, some people don't. I was just wondering if any of my speakers conduct any technical analysis on something like this, and if somebody's looking at, Snowflake coming out of these earnings, they're trading. They just came out of that massive dip down to 188, back up to 228. They're still below kind of that IPO price from September. Just wondering if any of my speakers use technical analysis, or if they have any thoughts if someone was, looking at it to start a position now, anything that they would, kind of recommend keeping in mind, and if not, that's fine.
Let's say for me, I'd say how do I do it? I guess I do track institutional fund ownership and like some of the best fund managers and see how often they do get in. And I was waiting for this report to decide if I would get a piece of snowflakes. I was thinking it would go down to 200 and after hours to pick it up, but I couldn't. But in terms of technical analysis, yes, I do take a look at charts just to see, especially with big volumes, either up or down, especially in the short term, and then try to correlate that to see institutional ownership. And Elizabeth here, who's actually joining us, does a good job of telling us who. I guess those would be kind of those are the key elements that I do take a look at. But if you're deciding on a real long-term thesis like snowflakes, no, for me the reason why I would plan and I would see where I get in after this report would just the RPOs are just the most interesting thing because if RPOs are growing by over 200%, then it just means over the next couple of years or quarters, you should expect this kind of revenue growth, at least at that 80% level, to be quite consistent over the next couple of years. So yeah, so that would kind of be me. I don't know if I don't think Muji's or Joe does any of that.
Yeah, I think it's really depends on the your position size and your time horizon here. Y- Like for me, I always have a little bit skin in the game, right? So like starting like 0.1%. If it's really good, I add more to it. But because I'm so in love with Snowflake technologies, so I'm going to willing to bet more on that. But if your uh, time horizon is less than 1 year, I think it's very risky stock here, because it could drop to 30 times EV times over sales, right? So then you have a big loss here. Um, so so if your time horizon is really long, 3 years out, I think it's a fantastic investment here. Um, like originally, I want to buy about 120, but I never be able to get it, right? So I enter at 227, I think a month ago. So so now if it dip under 190, I would be a buyer again, add more.
Yeah, and I would just say I don't really use TA much at all. If I want to own the business, I own the business. And with a lot of the hyper growth stocks, and I know those that might have heard me before, might have read some of my stuff, like they are always going to be either expensive or nosebleed. That's why they're the best companies on the market. That's why they get the premium that they get. And the question becomes, what are you willing to pay? And the truth is, if you're not willing to cross your personal expensive line, sometimes you'll never get into these names. So, um, this is a great business. I just wanted to own the business. I did not want to own the business when it was $390. At that point, I thought it was, it wasn't expensive or nosebleed. As I told Muji at one point, that it was ridiculous. And once it came back around full circle and went from 245 to 390 to 210 and got down as low as 195, and it had two more excellent quarters under its belt to prove its business model, then it became more interesting to me. And I don't have a problem if it grows 100% and the valuation gets cut and the stock only grows 20 or 30%. Well, who has a problem with a stock that might grow 20 or 30%? And my timeline is as long as it proves it's a dominant business, and it could be 1 quarter and it could be 10 years. So I'm not worried about the entry price as much as if it's a great company, it's going to be higher than it was when I got in. And I think my cost basis is somewhere around 220. So if I made a good selection and it's a good company, it's going to be much higher than 220, and that's really all I'm worried about. And if at some point it doesn't become one of my top businesses, I'm just going to walk away, and I don't care if it's 190 or 290 at the time. For me, it's all about the business more than the price. So that's not to belittle technical analysis at all. I know a lot of people use it. It's just not something that plays a big part in my process.
Appreciate that.
Awesome. Okay. Okay, thanks so much, everyone. I really appreciate that. I think we're all going to be looking forward to the Investor Day conference that's coming up in June. So I believe that would be the next update that we get from Snowflakes. And I do expect quite a few things there, especially on the data services aspect of the business, and that ecosystem they're building. So until then, yeah, I think follow Muji on his blog. He has lots of content out on Snowflakes as well. Stock Novice Joe does put out at the end of the month. I believe he provides a comprehensive update on each of his companies. So definitely check out his blog as well. And Frank obviously keeps posting updates about his companies. And yeah, until then, thank you so much, everyone, for joining us. And feel free to reach out to anyone.
Absolutely. And one last thing that I will say is this space was recorded by my team. We had some technical difficulties last week, but hopefully this one was well recorded. I think I have two people on here recording just in case. As always, my recordings are usually posted within 36 hours to both my YouTube and my Spotify for those who are just like to listen, on Spotify. And those are both can be found inside of my pinned tweet. And then I'll also post them and tag my listeners to Twitter as well. And then I also have two more spaces for anyone that likes listening to finance spaces. On Friday, I have a Q&A with Jonah Lupton that I always do. So if you're into a lot of the growth stock names, Futu, Upstart, some of the ones that have been kicking it off, you can check that out. And then 5 p.m. EST every Friday, I have a panel of investors just talking about their buys and sells that week, what they're looking for the next week, and general market trends, and much more to come in the future. Thanks to Max Bazenko, my co-host, for setting this up. Really helped get everyone on here. Thank you, Muji, for popping in and making some time. for the rest of us, and take care, everybody. And thank you, Francis, for moderating. So, Joe, Frank, take care, everybody. Have a great night.